Hey all, welcome to ShareTreck. This is Raj here. Friends, today the market is going to be of a very short duration. It's going to close up at around 1 o'clock in the afternoon. So there is not much of a room to do many trades. Likely to be a bit volatile. And personally, I'm thinking that we are in a very volatile situation. I'm trying to reduce my exposure to the stocks and selling off wherever I can take some profits. So that's what I'm doing. I was having a quick look at CNBC website, and I think CNBC is also in a holiday mood because their index futures have not been updated since 27th of November. So that's one of the observations that I'm making right now. And also we have seen a drop in India's quarterly growth, and that was preceded by around an 18% drop in most of the leading shares in the index out there in the BSE and the NSE. So hopefully there will be some bottom fishing possible and things can improve out there. Eurozone inflation is climbing to 2.3% in November, meeting expectations. So Eurozone is not in that bad a situation. But I think that there are a few speculative items out here. Shares of key chip suppliers jump as US reportedly considers toned down China curbs. The point I would like to make here basically is that the current administration is not gone. The new administration has not taken over. So this complicates everything much more in terms of reliability of these kind of news items and the possibility of them actually happening. So I think we should just ignore these noises as retail investors. The other thing I want to look at very quickly is the index and the futures. So if you look at Nasdaq futures is up 0.28%, and it's riding this diagonal line of support, which is a bullish channel. So it's looking pretty healthy right now, except when I look at the MACD, which has been struggling to repair itself. It has been bearish. It's been this entire week, it has been struggling to repair itself and has not succeeded. The momentum has been above average, but it has been flat for most part. It had been dropping, and it had a little bit of pickup as we come to the close of this very short week and the very short trading day. So I'm not pretty sure whether we are going to be able to achieve any breakthrough out here. But if we remain above this diagonal line of support, I would be really happy. And on the top, we have a squeeze with a resistance at 20905.50. And if we fall below the bull channel, we have support at 20664. And that, I think I'm going to mark it green because we had to update the chart. So that's where we are with the Nasdaq futures. And if I look at QQQ is up 0.26% in pre-market trading, and we have a diagonal line of support on which it is resting right now. If it fell down from there, the next support is going to be a very strong support at 503.52, where the support is coupled with support from the 20-day exponential moving average, failing which then we have another huge drop, which will take us to 495.96, which again will be a very strong support because it's coupled with the 50-day exponential moving average, which is at 495.13, which is this blue line that you see out here. That's what we have overall. And again, looking at the MACD, it has not been able to repair itself for the last 1.5 weeks. I'm not sure if we are going to be able to achieve that in the next few hours in a short trading day today. And momentum, though above average, has been dropping, which is also a negative. So that's my opinion on what's happening with our markets today. I'm not going to be talking about AI or genomics or anything today apart from this, but I would like to share a few thoughts. So overall, I think we saw a sugar high because during COVID, a lot of money went to the people who were not very rich, and they got money. And when people who are not very rich get money, they actually spend it on consumption. They spend it on food, clothing, shelter, those basic things. And also we had shipping blockage and port blockage and other things because of the COVID quarantine measures. And as a result of which, on one hand, we had increased the purchasing power and demand, and on the other hand, we had put a choke on the supply, and therefore we had great inflation. And then all the high interest rates and efforts to clear up the supply chain, all those things helped us to cool things down. So right now we are at a stage, I think, where all the saved money that was there and all the stimulus that came up because of the increased demand are getting exhausted. And the positive outlook that we are seeing is because the Magnificent Five, Magnificent Seven, and also leading companies in various sectors are pushing money into AI with the hope that it's going to increase the productivity and it is the future. So that's what is creating the optimism. And I think we are at an inflection point where consumer-driven enthusiasm is going to drop. We will see that probably in the JOLTS data and in the consumer confidence data, which is going to come up next week. And on the other hand, what is going to happen is that the enthusiasm from the Mag 5 and Mag 6, as well as leaders in the industry who are pushing money into AI, is going to be driving the market forward. Now, that's where I have this thought process, which is a little bit complicated. Please bear me out on that. On one hand, the future optimism is not going to be driven by the consumer sentiment and the consumer purchasing power, but rather by the optimism of the CEOs of these big companies who are thinking that getting into AI is going to help improve the productivity and the bottom line. And that's why they're pumping in the money. So as they are pumping in the money, we are closely looking at monetization of AI use cases. And we are starting to see green shoots here and there. But I'm not sure that it is sufficient for us that we will meet the lofty expectations, the forward multiples that we have for earnings, because it's no longer driven by the customer, but it's more driven by the sentiments of the CEOs who are looking at future and pumping the money into the likes of NVIDIA, SMCI, ARM and other companies. And then that in turn is leading to a jump in the share market values and the future projections and expectations of earnings. So that's the way I'm looking at it. To me, given that we are at a very high valuation at this point of time, it seems like very, very risky. And as I said, I'd rather take my profits right now and sit on the sidelines. And if a new bull channel comes in, I can use that profit to get back on the saddle again and ride the profits. That's the way I'm looking at it, because if things didn't go the way it was expected and the forward multiples are not met when the earnings come up in the next quarter, you're going to see a sharp drop. It could also lead to a recession. And at that point of time, I want to have money in hand. And then I'm looking at the likes of Warren Buffett, who have already sold a lot of holdings and kept a lot of cash in hand. And I'm thinking that I may not be a big investor, I'm just a retail investor, but in my small portfolio, if I could reduce my risks and take some profits, nothing wrong with that. So that's the way I'm approaching. So I'm going to be trimming my positions and taking profits in all those sheltered accounts. When I say sheltered accounts, in Canada, we have registered accounts under which if you take profits, it's not taxed. So I'm going to do that in those accounts, and in the accounts where it's not sheltered, where I get taxed for profits, I'm going to sell holdings which have losses in them so that I can reduce the profits that I have taken so far and thereby reduce my tax bill. So that's what I'm planning to do from now until the end of the year. So that's my strategy. Please let me know what you think about this. Put your comments below and I'll catch up with you again in the next video. Bye for now.